Hi there, I'm Russ Horn, and I've got a gift for you that could make you a lot of money. I'm going to tell you about that in a minute, but right now I just want to let you know that in the next few days, I'm going to be sharing some valuable information with you that you would normally have to pay for. All I ask is that you leave me some feedback in the comments section below. As a thank you for leaving a comment, I'm going to choose a few people that have put some thought into their comments and reward them by showing them how to trade Forex for a living. I know from teaching over 3,000 people over the last 12 years that a lot of you are going to have full-time jobs. As a matter of fact, 49% of traders that are learning to trade have full-time jobs. 28% have part-time jobs, and the remaining 23% are retired. I even know that 30% of traders are aged between 51 and 60 years old. And I also know that 19% of traders that are learning to trade are between 71 to 80. Now, I find this very interesting. Almost half of the people that are learning to trade are approaching retirement age or are already retired. I know these things because I work with and teach people almost every day of my life. And I know exactly how to help them. The system I'm about to teach you today is called the FXMarketCode. It's a system that I've invented a while back and I used successfully for a very long time to make money. Now, the reason I'm sharing this today is because I found something so exciting and so powerful that I'm basically giving away some of my best stuff because I don't need it anymore. And I'm going to tell you more about that in the days to come. Right now, click the download button just below this video. You'll download a zip file that will contain the FXMarketCode manual and an auto installer. Running the auto installer will automatically install the FXMarketCode indicators and template to your trading platform. Click to download the file now, and I will show you how to do the rest. Let's get started. Okay, now that we've downloaded the zip file by clicking the link that's under this video, we get an FXMarketCode zip. I'm going to open this up, and from here we have a FXMarketCode file folder. Inside that file folder, you'll find four different things. An indicators file folder. This has the market code indicators. Templates file folder, again, has the market code template. The PDF file, this FXMarketCode PDF, is the training manual for this system. You'll want to read through this and get as much out of this as you can. Everything is in here. This is a very thorough manual. All right. Now, what we're here to do right now is double click this exe file. This is the auto installer. And this is going to set up the Forex market code on your platform. I'm going to double click that. I'll click run. I do get a warning. Click yes. And now I have the FXMarketCode installation wizard. Now that I've got the wizard, I don't need anything else. So I'm going to close it down. I'm going to click next. The wizard has detected that a trading platform is open. So I'm going to take my platform and I'm just going to close it. Click the little X in the corner. It's closed. I will continue. I accept the agreement. Click next. And what it's going to do is find all of the platforms that you've got installed on your computer. So deselect the ones that you don't want it on. I'm looking to select it. I'm looking to install it on something called Invast. So I've got my Invast platform. I've got 3 of those. So I'll leave those selected while I deselect everything else. Now that I've got everything deselected and I've just kept the Invast one selected, I'll click next and next. It's installing, next, and then finish. And it will automatically run the application, which means the platform. So now my Invast platform will pop up and I've got just a blank chart. If I go to my templates, I will see I have an FXMarketCode template. I'll click that. And on my charts, I have the FXMarketCode. From here, the next step is learning how to use the trading system. I'm going to show you how the system works. We're going to take a look at 4 different trade types. we'll look at a conservative long and an aggressive long, a conservative short, and an aggressive short trade. First, we're going to take a look at the indicators really quick. This is on the price chart, the Marco indicator. This is a 50-day moving average. This blue line being a 50-day is used a lot by stock traders, commodities traders, FX traders. It's used by traders all over the planet to determine trend. When the price is above the 50-day, we have an uptrend. When price is below the 50-day, we have a downtrend. Now, when the price is above the 50-day, we're going to see that the indicator starts printing green bars. It'll be bright green and dark green. When the price is below, it'll print these red bars, bright red and dark red. Fairly straightforward. The OSMA is what's below. Now, this is going to validate or confirm our entries. Our entries are going to be based largely off of the color of these indicators. We are waiting for an indicator to turn a bright color, a dark color, and then back to bright. In a long trade, we're looking for the bright green to turn to a dark green and then back to a bright green. In a short trade, we're looking for the indicator to be bright red, turn to a dark red, and then back to a bright red. So we have that seesaw. We've got the bright, dark, bright. That is essentially what we're looking for. The dark is going to show us the pullback. And that's what we need, is for the market to pull back. So let's go into what we would consider a conservative long trade. Now, a conservative trade simply is going to be that the OSMA remains green during the pullback phase. Now, it's going to turn dark green, but it stays above the zero line. The zero line will be this flat line where the bars emerge. Upwards, they'll be green. Downwards, they'll be red. So this is going to be the example we look at in here. So we have, first of all, the price is above the 50-day. It's printing these green bars. So we have an uptrend. And that's very important. We want to be trading with the trend. The OSMA bars, they are also bright green. The price pulls back and starts to print a couple of dark green bars. Now, we're going to get that on the OSMA as well. It's generally going to turn a dark green before the Marco bars on the price do, and that's okay. The OSMA is telling us momentum. We want to be trading with the momentum. When momentum fails, then the OSMA starts to move towards the zero line. When the momentum is strong, it'll move away from the zero line. So we have price pulling back, turning the Marco bars to a dark green. The OSMA turns dark green. And what we're waiting for is these dark green bars to turn back into bright green bars, or lime colored. These are lime. So we have these lime green bars. So at this point, this one candle right here, let's zoom in a little bit. This one candle turns the Marco into bright green. Now, we don't have the confirmation just yet on this OSMA indicator. We still have a dark green bar. So what we're waiting for now is a bright green bar. And we get that on the next candle. So we have that confirmation on the next candle that the momentum is back upwards. When the histogram bars on the OSMA start printing dark, it means that they are lower than its previous bar. A dark green bar is lower than its previous bar. A bright green bar is higher than its previous bar. So when the momentum resumes, we're looking for an OSMA bar that is higher than its previous bar. So it'll turn back to bright green. This then would be our entry signal to go long on this bar right here. So we would enter on the close of that candle. So once that candle closes and the OSMA bar prints the bright green, we know we've got the signal. So the close of that candle is the open of the next one. I'm going to count back 1, 2, 3. 3 closed bars, and that's going to include the signal candle. 1, 2, 3, and I'll place my stop loss below the lowest low of the previous 3 or the most recent 3 closed bars. 1, 2, 3. This is the lowest low. At this point, I'm going to be looking to take a 1-to-1 profit target. So if my stop loss is 20 pips, I'm going to be looking to take a 20 pip profit target. And it's really that simple. Now, as the price progresses, this next bar closes, I'll count back 1, 2, 3, and then I'll move my stop loss behind the lowest low of those three, and so on. Next candle closes, 1, 2, 3, the lowest low. And that's how I'm going to move my stop loss along the way. All right. So that is a conservative long trade. Trying to get rid of the indicators. There we go. The next one is an aggressive long trade. We're looking to be a little bit more aggressive. Now, this is going to come down again to the OSMA. What we're looking for is an OSMA that has momentum returning to the upside. When the OSMA is green, it's got some strong upward momentum. When the OSMA is turned red, the momentum is quite strong to the downside. And we're going to see that we get a red OSMA quite often in an uptrend. The market is moving up, but the OSMA turns red at times, even though we're not anywhere close to the 50-day. It's just showing us that the momentum is quite weak. Now, again, we're looking for the change in momentum. You get the bright red OSMA bars, the downward momentum is fairly strong. But when they turn red, that downward momentum starts failing. So we see that that weakness in momentum is a strong possibility that the trend is going to resume. Now, in an aggressive trade, we're looking at the red bars as opposed to the green bars. We have the momentum turned down, the OSMA turns red. I'm going to zoom in on this. And what we have is a bright green Marco bar and a dark red OSMA bar. This is an aggressive signal. So again, we're going to need that price is above the 50-day, printing the bright green bars. Once the price is above and is printing bright green bars, we know that trend is up, and that's the direction we want to trade. We're trading with the trend. So we've got this upward trend. Momentum is pulled back and given us dark green bars and then bright red bars, showing us that the momentum really is down. Once the trend resumes and we have that dark green Marco bar turn into a bright green Marco bar, that is showing us that we got the pullback. And now that the price is back on the way up, we're looking for a dark red OSMA bar because it is going to be higher than its previous bar, showing us that the momentum downwards is starting to wane or fail. An aggressive entry would be when we get both a bright green bar and a dark red OSMA. Again, it's not this candle. We get the bright green bar, but it's not coinciding with the dark red. The next candle, however, does. We get a bright green bar and a dark red OSMA bar. This becomes an aggressive long trade signal. We'll enter on the close or the open of the next candle. Count back 1, 2, 3. See if I can do this without, all right. The lowest low of the last 3 closed candles, 1, 2, 3. It's this center candle here. And again, we're going for a 1-to-1. So that means if my stop loss is 25 pips, my take profit also is going to be 25 pips. So that is an aggressive long trade. So we've got the conservative long, which is when the OSMA stays green the whole time. We've got an aggressive long, is when the OSMA turns red and back to a dark red, showing us that the upward momentum has started to come back again. Now we're going to look at short trades. I got them all. Yay. I'll zoom back out so we can see a little clearly. So a conservative short trade would be when the Marco indicator is red. We get the pullback, giving it a dark red. And we see that in the OSMA indicator itself. And then the Marco turns bright red, showing us that that downward momentum has resumed. The pullback is over. The OSMA turns also to a bright red, showing us that downward force is back. But that whole time, the OSMA has stayed red. During the pullback phase, the OSMA has stayed red, never did turn green, and then we're looking for that bright red bar to tell us the momentum is back in order again. Now, if I zoom in, we're going to look at this area right in here. So we've got the bright red bar turns into a dark red bar, showing us we have a pullback. Now, we've got several opportunities in here, but I'm just going to focus on this most recent one. So we've got the bright red bar telling us we've got the downtrend. Pulls back, gives us the dark red bars, showing us the pullback. All right, so what we've got here is the bright red OSMA turning into dark red. It also is showing us the weakness in momentum, showing us the pullback. So now with this big bar, we have the Marco printing a bright red bar again. And that coincides with the OSMA also printing a bright red bar. This shows us that not only is the trend back in order, but the momentum is back in order. So we have both the trend back down, that pullback is over, and the momentum down is now coinciding. So we have the trend, the pullback of the trend being over, markets moving back in the trend direction, and we have the OSMA confirmation or the validation of the trend direction, the momentum. The momentum is carrying on. So at this point, we're going to enter when this candle closes, because only then will we know if the bar prints red. We're going to enter a sell trade at the close of that candle, which would be the open of the next. Stop loss is going to go just above the highest high of the last three closed candles. So this candle closed. This will be the signal candle, 1, 2, 3. This little white candle has the highest high of those three. That is where the stop loss would go. And then from there, I'm going to place a 1 to 1. So that is going to put that. I want to copy that. That is going to put that in this neighborhood here. So we're looking at a 1-to-1 profit target. Again, 1-to-1 means if the stop loss in this one is 50 pips, my profit target also is going to be 50 pips. So I'll follow this down. As the next candle closes, I count back 1, 2, 3. Highest high is here. 1, 2, 3. Highest high is here. And we're going to get that all the way down until we get either taken out by our stop loss or taken out in profit. So let's take a look at an aggressive short. I might have to zoom out and we'll find one here. An aggressive short. Nice example of this in here. We have an aggressive short, meaning the pullback, we get the bright red bars on the Marco. The pullback turns the bars dark red. So we have that price pulling back. That's the confirmation of the pullback. However, the OSMA turns green. So the momentum really has changed. The momentum is quite strong upwards in the opposite direction of the trend. We still want to trade in the direction of the trend. Price is underneath and it's printing the red Marco bars. So we're looking for the downtrend. What we want to see is that we get a bright red Marco bar after the dark red. So we have the bright red telling us the trend is down. We get the red, the dark red pullback, and then we're looking for the bright red back in order in the trend direction. The Marco is going to print bright green bars, and what we're looking for to coincide with the bright red is a dark green. The bright green shows us the momentum is up. The dark green shows us that the upward momentum is starting to fail. So I'm going to zoom in on this. So we've got, it's hard to see, but this is still a dark Marco bar. Finally, we get a bright Marco bar. I'm going to mark this off just so we can see. We get a bright red Marco bar and a dark green OSMA histogram bar. Now, the dark green happened one before. It happened on this one, on this candle before, but the bar was still dark red. So the pullback wasn't officially over. It was still pulling back, but the OSMA is showing us that pullback momentum has basically ended. But we want the confirmation of both indicators. We want the dark green of the OSMA and the bright red. This would be our entry. And this is going to be a bit of an exception. We have this huge spike here. I don't want to be placing my stop loss this far away from the entry. It is such a big one. So what I'm going to do is either use the 50-day as my stop loss, or I'm going to simply disregard that wick. That is monster wick, which gives us a huge, huge stop loss. Now, when I'm looking at this, I'm looking at the candles that have happened recently. Is a stop loss that is as enormous as this is reasonable? When I'm looking at candles that are not even half the size, if I use a stop loss that is that big, my stop loss is going to be 62 pips on this 1 hour time frame, when the average candle length is more like 15 pips. That's 4 times this bigger candle. That doesn't become reasonable anymore. So I'm going to disregard this, and I'm going to use this one here, or the 50. So I'll use the 50 moving average. This is a little bit more advanced. If you find that your stop loss seems really, really big, you either don't take the trade or use a different indicator or count back maybe 2 candles. Stop loss is going to go, oh, that's the wrong line. Entry on this candle. Stop loss above the 50. And I'm going to go for a 1-to-1. And as the price progresses, I'm going to count back 3 once this candle closes. 1, 2, 3. 1, 2, 3. It's going to be this high. Next candle closes. 1, 2, 3. It's going to be the highest high of the last 3. This candle closes. 1, 2, 3. I'm using the highest high of the last 3 closed candles to trail my stop loss. So there we go. We've got conservative long, aggressive long, conservative short, aggressive short. This simple system is really nice. It is nice and clean. I want to show you really quickly why we use the OSMA. It has a very nice filter effect. It's going to keep us out of some trades that we might otherwise want to get in if we're using only the Marco. The Marco prints bright red, shows us that the trend is down, shows us that the market is really moving in the trend direction. We have the bright red bars showing us the market is pulling back against the trend. And when it resumes to bright red, we assume that the market is moving back in the trend direction, which is nice. That's ideally what's happening most of the time. However, there's going to be instances where the market looks as though it's moving back in the trend direction, but the OSMA doesn't agree. If we had taken this trade, this would have been a losing trade. If we had taken it based only on the Marco indicator, it would have been a losing trade. The OSMA is continuing to print these bright green bars. So it filters that out. It filtered that short trade out. We would have lost. Because of the filter, we did not. Once we got the pullback far enough, OSMA started to weaken, and we got in when the market did decide to start moving down. Take another look at a potentially long trade in here. Bright green bars above the 50-day shows us that the trend direction is up. OSMA agrees. The momentum is up in here. We get the pullback, which is what we're looking for, and then the bright green bars on the Marco print. Again, we're going to be looking for that pullback, and then once the bright green bars happen on the Marco indicator, it's showing us that the pullback is essentially over, but the OSMA is showing us that the momentum isn't. The downward momentum, the pullback momentum isn't over with. It's not done. So we get no green bar or no dark red bar showing us that the momentum is back up. So this would be a trade that we don't take. So we've got a couple of filtered trades that never happened because of the OSMA indicator. It's a nice system, and it does work. I mean, this really is the foundation or the basis of the Forex FXMarketCode. This is taking advantage of the three different components of trading. You want to find the trend. You want to be trading with the trend. How do you identify the trend? Well, we know this now with the 50-day moving average. You want to be looking for the pullback within the trend. And we get that with these dark bars on the Marco, dark green in an uptrend, dark red in a downtrend. And then we want to somehow confirm momentum. Is the momentum, the upward momentum in an uptrend back? Is the downward momentum in a downward trend back? We're going to have a failure in the momentum, but then we're going to see that the momentum returns. And the OSMA does a really nice job of this. So we're going really down to the basics of how the market moves, how the market works, what it is we're looking for to take advantage of. If we're looking to trade pullbacks against the trend, successful pullbacks don't happen very often. We'll have a pullback. We'll have frequent pullbacks, but they don't go very far. When you're trading with the trend direction, you're going to get opportunities where the market moves the most. All right. Thanks for watching this training video on the FXMarketCode. Now, all of this is in the manual. Read through the manual. You're going to get a lot out of it. It is a great system, and really use this system. Try this system out, and then leave a comment below. Leave a comment, and I'm going to go through them. And if you have a great comment, I'm maybe going to pick you, and you are going to be learning how to trade the Tradonics system. All right, one more time. Don't forget to leave a comment if you want me to show you one of the most exciting discoveries that I've made in Forex. Thanks again for watching, and I hope you do get a lot out of this system.